Hello value investors, thank you for joining me. Today we're going to talk about DocuSign. We're going to talk about its revenue growth rates, we're going to talk about its profitability, we're going to talk about its valuation, and how that all fits together. Before we get started, don't forget to subscribe so you can get my next value installment. Also, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why with a balanced argument for the stocks I own. So let's get started. So DocuSign came out of the whole COVID crisis and it just accelerated its growth rates, and investors felt that was just a COVID trade. Then on Friday they put out their Q1 results and it just blew people away. So the revenue growth rate for the quarter was up 58% year over year. So right away that tells you two things. First, it tells you that it's not just a flash in the pan, that it actually has a lot of staying power, and they also put out guidance for the year of 41%. So you have a business that is growing quite substantially. And what I like about DocuSign is that it's no longer just about being an e-signature platform. It has 2 or 3 now different products that are really kind of trying to offer a broad view of the lifespan of the document. So it's doing really great things, and I think that investors would be good for investors to just look beyond that one e-signature platform and comparing it with the like of Adobe or what Dropbox does. So there is a lot more to the story here, and I think that over time you may actually see DocuSign as being part of a whole productivity platform. So it's not going to be just about, real estates need to use its e-signature platform. There's going to be a lot more to DocuSign going forward over the next 12 months. And I think that investors probably are too caught up in that level 1 story and not really thinking about the new products that are coming on and the sustainability of its growth rates. Another thing that I want to talk about, so I like looking at billings. Investors typically look at billings, and billings for this quarter were 55% year over year up, and over its trailing 12 months were approximately 54%. So sorry, I did it around. So for the trailing 55% and for the quarter 54%. So whichever way we go about it, the business has got strong billings coming in. So this company is more likely than not going to be growing at approximately mid-40s to low 50% over the next 12-18 months more or less. So you got a very strong growth rate here. And what's important about DocuSign is that it also has strong profitability. So for the quarter, they're pointing at approximately 70% operating margins. That's something that's quite attractive and something that's worthwhile considering. Now, here's the thing. At 22 times forward sales, the company is not cheap. Having said that, there are some examples. For example, it's not really a peer, but CrowdStrike is priced at approximately 34 times forward sales. So you could look at other examples like Datadog. There are some SaaS businesses, Zscaler, that are kind of really still holding on to that really premium valuation. So in that comparison, DocuSign is actually quite cheap at approximately 22 times. On the other hand, you have things like Salesforce. I know Salesforce is no longer, at its best, but that's priced at approximately 8 times forward sales. It's never been a company that's traded at a particularly high multiple, as you know, because it's always a serial acquirer, it's always acquiring businesses, and it's very difficult to go on that path of consistently acquiring businesses that are going to be able to move the needle on the top line. So it's always been a company that investors have been quite dubious about. But anyway, so you got some businesses like Salesforce that are trading at 8 times. You got other businesses that are trading very expensively at approximately 30 times or even higher. Then you got stuff like Adobe that is priced at 16 times. So, and you also got ServiceNow that is approximately 17 times. And Adobe and ServiceNow, not only are they growing at a significant rate, they're also quite profitable. So those are reasonable comparisons to DocuSign at 22 times forward sales. So kind of it's on the spectrum of being kind of on the higher end, but I think that there is a lot here to be compelled about. As I mentioned already, it's one of the few companies that I know that is growing at as fast as this and still has strong operating margins. So it's investing for growth, but it's also quite profitable. So it's a nice value proposition that it's putting out there. So with all that in mind, I hope you found this video useful. Don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why. Thank you. See you soon.